With another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and hit the notification bell. That way you're notified whenever we release new videos. We do release videos every night throughout the week and once on the weekend. Make sure you're following us on X at Bullish Chips. That way you get real-time updates as to our entries and exits on not only scalps and day trades, but mid and long-term trades as well. We also provide further commentary throughout the day with things like the internals for QQQ and other notes on price action that we see within SOXL's price movement. We want to remind you we're not financial advisors. We do not offer financial advice, but what we do offer is our view of SOXL's price action, not only in the current day, but in the past, as well as where we think price action is going to take us in the future. So without further delay, let's get into the charts and what this video is really about. Just a reminder, if you're not familiar with our videos, if you're new to the channel, make sure you check out the description of this video for our videos with some bonus content about how we set up our charts. That way you're familiar with the different colors for the different indicators that we use to indicate different time frames, and give you a little more detail about how we use the strat as the base of our trading method. The strat was invented by Rob Smith, rest in peace. He's no longer with us, but if you want more information about the strat, look in the description. There's also a link to Rob Smith's YouTube page. That way you can review all of his old videos, and there's plenty of information on the internet about Rob as well, so make sure you do your research on him as well. So again, without further delay, let's get into the chart. We'll look at the day chart, and we can see that we had a pretty positive day. Not a lot of action intraday, frankly, but the fact that we were able to open up from where Friday closed, not quite a gap up, but it at least opened higher than where we closed, and then we're able to push higher and then maintain higher. It's obviously more bullish than bearish, but it's not overly bullish, right? So we already broke below the 4-week range that we had been trading in previously. Giving respect again to this weekly broadening formation that we have here in the purple line, the year flip right here at 2813, this dashed horizontal line, and this monthly downtrend line that we have here in the green dashed line. So you can see here we were in a range, from basically 28 to 24 for about 4 weeks. We were able to capitalize that on, buying puts at the highs and buying calls at the lows. Intraday, we didn't really do anything. We closed a couple of trades out for even, but we still have our calls for September that we bought down here at the lows last week, the week before, and as well as our January 26 and January 27 calls. So they're all maintaining positive posture, gaining a little bit back from what they lost last week. So everything is still positive. We're still, although it's not realized gains, we still got gains on those contracts today. So not too disappointed with the day. We didn't lose any money. We're a little disappointed in the fact we didn't make any realized gains today, but we didn't lose anything, and the longer term positions that we did have some unrealized gains. So positives to take from the previous day's action. So we're still remaining firm with this bounce off of the top of the gap that we had talked about, for a couple of weeks as a possible bounce point. Knowing that gaps are kind of magnets for price action, but a lot of times we do see bounces off the top of the gap, and that's what we ended up seeing on Friday. So we maintain above the month flip and the quarter flip as well. So, being the day is green and today is the first day of the week is obviously green as well. So if we look here at the upper left-hand part of the chart, we can see our time frame continuity indicators. So we have the day, the week, the month, and the quarter, which are green. We just have the year that's red, and we're at $25, not too far from 2813 that we need to flip it green. So still remain overall in an uptrend, right? From a longer term perspective, a week and higher. From the day perspective, we'll go ahead and bring the day the daily broadening formations, these orange lines, you can see that when we got the initial higher high and initial lower low, we had a pretty wide broadening formation that had formed. But then when it was followed up by just a slightly higher high and a slightly lower low, we can see that the broadening formation tightened up. We did, push through it again on Friday, but we price managed to push back up into the previous day's range and slightly into the tighter daily broadening formation, even if only temporary. But it shows the alignment of the daily broadening formation with the top of the gap, aligns with the mentality of this being a bounce point, at least if temporary. It is a bounce point, and things are lining up to indicate that, which was why we were able to capitalize on the bounce. Now, what we want to watch out for here is, because there wasn't a lot of price action today, intraday, and we're still technically, we don't like to bring trend lines in too much, but it is aligning with where we're closing under, so we're still feeling some of the pressure from that downtrend line. We want to watch out to make sure that, either today or tomorrow doesn't end up being a lower high, right? We've already had a lower high from this perspective right here, so technically we are in a downtrend. We had the lower high followed by the lower low. So the downtrend has started. But if we keep in perspective, the week, let's go ahead and get those daily broadening formations out there. If we go ahead and look at it from the week perspective, it's very possible that last week we put in a higher low, right? So we want to continue to watch price action. We want to see if we can get a push above this monthly downtrend line, which comes from way back in last year, right? The end of last year. We want to push through that, and then, at least try and get back to this year flip, and at that point see if we can flip it. We may again run into resistance if we are able to flip past it, where this weekly broadening formation is at. But we'll kind of approach that how we need to when we get there, if we get there. But we want to still keep in mind we are at the lower bottom half of this last week's candle, basically at halfway line. But could be very easy for us to flip the quarter and month red once again. That would of course flip the week red, and we're in full time frame continuity to the downside at that point, which again we're more than likely going to fill that gap and probably look to, if not equal this 3, breach the bottom of this 3. So we do have this weekly uptrend line way down here. Maybe we come down, breach that 3 and bounce off this uptrend line. I'm not sure if that's in the cards. We do have seasonality coming up. August, September, October, seasonally the underperformers for underperforming months for tech. So we want to keep that in mind. August not quite as bad as September and October. So we do still have that little glimmer of hope from at least a seasonality perspective that we could have more push to the upside left. But you can see here on the weekly chart we are below the 50-day moving average and the 200-day moving average. The 50 is below the 200, so that's a bearish cross technically. But we're not going to put too much weight into past indicators. We just want to make sure we're keeping these things in mind. We want to just be nimble and be able to react both ways. So when we get into the charts, into our notes here a little bit further into the video, we'll have some exact entries and exits that we'll be able to put in our notes and know exactly what we're going to do tomorrow, whether price action goes up or down. So we'll just break down the day's action real quick. Again, not a lot of action. After the open up, we did get a little bit of a push up, pulled back, got a higher low on the 15-minute time frame. I believe it was on the hour as well. No, the hour was further on in the day. But yeah, there wasn't really much of an entry if we're following our rules, right? Let's bring up in here on our scalp lines, right? So we have our opening print, which is this peach price level 1. We have previous high day, overnight high, right? So we know that if the price action is above opening print, if we can get some type of higher low above opening print, then we need to be entering calls at, first target previous high day, second target overnight high, and then we have to bring out our other targets from our notes to know where we want to try and get to. From there, Yes, last week's 50% is this 25.36, which would be a pretty reasonable spot, but we do have to contend with this monthly downtrend line. So we just wanted to play it safe today, especially real early in the morning. You don't if you're going to get into something early, it's probably going to be a scalp. We jumped into a scalp with this higher low here on the 15 minute, which was actually on the 5 minute as well. They're at the same spot, but we got that in because it was above opening print. It was right at price previous high day and overnight high, so those targets were kind of off the board. You were automatically going to hit them with the two up on the or the higher low once you got that two up. So we were targeting last week's 50%. We had some good price action up here. We stayed in them because if we look at internals for the QQQs, you can see the tick was never really below the zero line, often flirting with trend higher zone. Vol QD, so volume inflows, they were elevated all day and only pushing up. And breadth also was it opened up in trend higher zone. It went down, bounced off of the lower part of trend higher zone, and then just went up for the rest of the day. So we remained in our calls. We ran our calls because of the internals. We obviously didn't think we were going to have a big pullback. If we did pull back, we had our stop set right here, overnight high. Once we saw how slow the day was moving, we ended up going to the 5 minute chart and just kind of moving up with every higher low, moving our stop up. Once we got up here, we kind of stopped moving our stop because the price action was starting to move sideways, so give it a little bit of room to breathe. It still allowed us to get out at even if we needed to. And towards the end of the day, we did end up getting stopped out at even on the scalps that turned to day trades. Now again, if you follow this channel, you know we don't usually buy weeklies up for the same week. We did have calls for next week, so we had time on them. They weren't going to get eaten up by theta. We did stop out at even, and we missed the push up at the end of the day. But again, we have September calls. We've got January 26 and 27 calls. So not too worried about it. As long as we weren't losing money today, everything's all right. We've got shares. Those are still increasing in value if price is going up. So everything is still okay. We're not worried about price action. And if anything, we can get positive price action tomorrow, because if we look at how we closed on the 1 hour, we did get a 3-2 down, failed 2 down, that is. And that's one of my favorite strats is a 3 failed 2 down. You usually get a 2 up. This isn't as enticing because the magnitude for the 3-2 down 2 up is the high of the 3, and the 3 wasn't that large, and the high of the 2 isn't too far from the magnitude of the 3. So it's still something to enter. Probably looking for further continuation to last week's 50%. It's not something that I'm just trying to scalp from here to here. Again, it would probably be a contract for next week, giving it time to try and rise. If we get that fast push tomorrow, it still has an expiration that's close enough that we're going to get the good push. We buy at the money or in the money calls anyway, so our delta is going to be is still going to be high, and so you get in with the trigger on the 1 hour. It can domino into a 4 hour, right, which is 2-1 2 up, right? So that would, again, magnitude would be here, but that would put us back into the larger combo 2 down, combo 2 up, with the first target point being the high of this candle, which is just slightly above last week's 50%. So again, that rolls into our plan. If we can get in on that hour, that really gives us an advantage of being in kind of early. We can even look at the 15 minute once we're in during the day tomorrow. If we don't open already triggering 3-2 down 2 up on the 1 hour, then we can get in on the 15 minute to get our higher low, above opening print or something like that, to make sure we're getting a good entry. But that's something I'm looking to take tomorrow. Trying to get back into the range of the last 4 weeks, right? Trying to get back up into this zone. I can see that happening. Now our next target would probably be this 2584, 2604 area, which is last quarter's high, this yellow line, and last month's 50%, which is this green line. But if we've got real good momentum behind everything, our ultimate target is going to be the high of this candle, which is the 2674. Again, that would be a pretty great day tomorrow. and it would fight through a lot of the resistance that we have to put us in a much more bullish posture back up in the range that we had been in previously. But we want to keep in mind that that is a lot of resistance, and we've got a hourly broadening formation here, 15-minute broadening formation here. So we do have some resistance above. If we kind of take the short-term mess out of the way, there's not a whole lot, just this monthly stuff, but this monthly downtrend line. But we just want to keep in mind that we've got resistance above on a short-term perspective that we've got to fight through before this longer term really comes back into play. Because we made a lower high on the overall four-hour range and down here into a lower low. So I just want to keep that in mind. So I think we've kind of covered enough of previous price action and what could happen tomorrow. Let's go ahead and get in and put up our 4-hour markers and set our notes, right? So first thing that we need to do is move our previous high a day and 4-hour triggers to the upside. So we'll move the previous high a day from yesterday's high a day to today's high a day. Then we'll move the 4-hour trigger to the upside to the high of today's 4-hour candle, right? And we'll move the 4-hour trigger to the downside to the low of the second 4-hour candle today. And we'll move the previous lower day to the low of today. Right, just like that, we've got those moved. Let's go ahead and get to our notes. And we will duplicate today's notes. And we'll make this Tuesday, August 5th. The notes will be from today, August 4th. Tomorrow there will be 101 trading days left. We want to get our close price for today. That was 25 flat. All right. And then we want to look at what the weekly flip is, right? So that's the opening print for the week. So that is the opening print for today. Today is the first day of the week. So let's get our horizontal line. We'll edit this. So this is the week of 8/8. We'll give it this red marking so we know that that's the week flip. That flips us red. That's the quarter flip. That will flip the quarter red. That's the month flip. That will flip the month red. So we know if we're zoomed in on a 15 and we're trying to scalp, we know if we encounter these levels, okay, we know these can be some points of support for us. Or if we're having to approach them from the bottom like we are from the year flip, this can be resistance. Just another indicator on the board out there to help us maneuver the price action no matter which way it goes, right? So the next thing we want to do is mark out our 4-hour triggers. I'm trying to zoom in just because the second 4-hour candle was so small today. I want to make it all visible. So the trigger is to the downside. It would be a 2-1, 2 down, the trigger being the low of the second 4-hour candle today, which is this one. So the low would be 24.82. And again, this would be a 2-1, 2 down. The magnitude would be the low of this 2. So it's 24.24. All right, so we got the 2-1, 2 down. 24.82 is our trigger. The magnitude being 24.34. All right, we'll put out some extended targets. Let's bring out our fib chart. Yeah, so we've got, the month flip, last month's low, and last year's low as well. This 0 line, this white dash line. So it's about the 2350 area. So we use that as an extended target, and past that we don't really have much else other than the gap close. That'd be pretty extended, but I mean, hey, it's there, so we need to mark it. So 2701, I'm sorry, not 2701. Oops. The high of this gap is 2263. Right, so we've got the 2-1, 2 down trigger, the magnitude, if it reaches this magnitude, we have an extended target of 2350 and 2263. All right, so let's mark our upside triggers and targets. This would be a 2-1-2 up. Right. Let's go back to 2-1-2 up. Trigger being the high of this candle, which is 25.15, and the magnitude would be the high of this 2, so that would be 25.18. All right, we don't have a lot of magnitude there. 3 cents isn't that much, so again, it's kind of tricky entering that. You got a better entry on the 1 hour with the 3, 2 down, 2 up, but you know, we approach anything lower than the 4 hour on the actual day that we have. You know, otherwise you're trying to predict too much of where things are going to be at. Let's go ahead and make some extended targets for the upside. Let's go ahead and bring our fibs back out. So we've got last week's 50% of 25.36, and 25.84, 26.04. 25.84 was pretty good resistance. Poked through there, but it was resistance there. I'm going to use the 25.84, and again, a couple, 30 cents may not seem like a lot, but when it's only a $25 underlying price on the ETF, 1% is 25 cents, right? So that's like almost a 25% move in and of itself. It's a decent move on the underlying, on the premium for your contract. So let's go ahead and continue on. I guess our last extended target, what did we had a, I guess we'll just use the 2604. I mean, our extended target, if we do break above here, I mean, we're handily back in the combo 2 down, 2 up, so technically our extended target should be the high of this candle, which is 26.74. It's a pretty big move. We've already got it in there, but hey, it could make that move, right? So we've got our triggers and targets for the downside and upside. Now remember, because we have a strat reversal, a 2-1-2 down, the magnitude of the 4 hour is going to be the trigger for the 1 hour. I'm sorry, for the 1 day. And again, we have a strat reversal here because of the 1. So the magnitude here is also going to be the trigger for the day to the upside. So let's go ahead and bring up our day chart. Oops. Let's go ahead and bring out the day chart. So if we get it 2 down tomorrow, if it triggers, if the price action goes below 24.82, which takes us to 24.24, and we break below 24.24, now we've triggered the 2 up, 2 down on the day, right? And that's a strat reversal. So the trigger is the low of this candle, which we've already got marked, and the magnitude is the low of this candle, which is the 22.57. Magnitude 22.57, which also happens to be the top of this gap. Well, 22.63. Oh, that actually should be 22.57 if that's the low of that candle. So close the gap just a little bit. I forgot on Friday. So that that takes us to the top of the gap. Our extended target then would be the bottom of the gap, 21.98. Right? And then we've got our other extended target already there is 20.28 as well. 20.28 also happens to be a lower low on the day time frame. That would keep us, with the lower high being made here, and obviously making a lower low. So again, price action, not a lot of price action intraday today, which leaves us kind of exposed for an easy reversal to the downside, but leaves us in position for the extension to the upside, right? So let's mark our triggers and targets to the upside. This would be a 2 down combo 2 up. All right. The trigger we already have marked because it was the magnitude of the 4 hour strat. The magnitude for this 2 down combo 2 up is the high of this candle, which is 26.74, right? And then that puts us in a 1 combo 2 down combo 2 up strat, which leaves us with the magnitude of the high of this candle, 28.16. That's why we got the 28.16 here. And then we've got our extended targets, 28.50 and 29.26 left over from yesterday, or today, I guess we could say. Price did not go below 22.57, so it did not trigger anything on the week. And price did not go above 28.16, so it didn't trigger anything to the week on the upside. So we still have our triggers and targets intact for the week. If we look at our triggers and targets for the month, again, we're still above 23.58. We're still below 28.50. So nothing there to consider. Although we have to remember, because this is underlined, the 2 up, 2 down has triggered at one point already this month on Friday. So we're not in force anymore. We're not below 23.58, so it's not in force, but it has triggered. So are we going to change? Is this month going to be a failed 2 down? We'll have to wait and see, but we do know that 2 up, 2 down reversal strat has triggered. From a quarterly perspective, we're still below 25.84, so we're not in the 2 down, 2 up in force strat either, right? So we're kind of still floundering in the middle, which is why we went ahead and closed out our calls today that we bought today, even though they didn't expire till next week, just because price is still kind of in limbo, right? We want to make high percentage trades. We don't want to leave ourselves exposed to take unnecessary losses, especially overnight. Losses are way easier to control throughout during the day if you're trying to trade short term than they are overnight when you don't have incredibly bullish signals, right? If you're in a daily downtrend, just because you finished the day at 2 up, a green 2 up, and you didn't go down today, doesn't make it incredibly bullish. We move sideways. So, you got to stay on your toes. We have longer term swings for September and on, like we talked about. Those are ones that you can be more comfortable in sitting through, and being able to take pullbacks in if necessary. And then if something like we're basically looking for the lower high on the day. If we get a lower high on the day, we're going to be out of our call swings for September, maybe at a slight loss possibly, but that's not that big of a deal because we will be capitalizing on puts. We're already selling calls right now, so there's other ways to continue to make money off of SOXL without buying single leg calls. So we want to look for those indicators. If we get the lower high on the day chart, then we want to look a little bit more seriously at buying puts, with lower highs on short-term time frames, right? So we just want to stay nimble. That's why we keep these notes with the triggers and targets. Remember that our range for this week is $3, high being 27.08, low being 21.08. That's just the expected move for the week. We're at 25, pretty a little bit closer to the top end, but still kind of in the middle of that range right now. So a direction hasn't been chose for the week. It wasn't really chose much for the day either. But we did get the green action in the day, although it wasn't very, didn't have much magnitude to it. So wish I could give you more. I wish I could tell you just buy longs for next month right now, go heavy, but the end, it's just not there on the charts yet, right? Until we're able to resolve a higher low, either getting a higher low here before getting a higher high, or making a higher high to continue the broadening formation and then possibly getting the higher low. Until we're able to break out of this daily time frame, yes, we're in the uptrend on the week, but it is kind of breaking down on the week as well. We don't have too much further to go to make a lower low on the week as well. SOXL can move $10 in a matter of days. It's not that hard for it to do. So we want to just stay on our toes. Follow our rules when we're taking intraday trades. Anything above opening print, it looks like calls, especially if we've got other things backing us, like higher highs and lower lows higher highs and higher lows on shorter time frames. If we're looking at the internals for QQQ and they're very bullish as well, then we know we can go calls. If price action is below opening print, we're looking for lower highs. That way we can enter puts and really capitalize on price action going to the downside. So we're well equipped. We've got our notes. You can reference them very quickly at any time and help to guide us. using the other rules that we have to, continue to make money every day. And even if we're not making money, we're not losing money. So continue to follow your rules. Continue to keep a repeatable method that you can use, and we'll continue to profit here. Averaging over we profit every day if you average out the days, right? It's not always possible to um, uh, bring in cash, profit every day. You can have unrealized gains with those longer contracts, and still not have realized gains in the day. But we'll make money this week. We'll make realized gains this week, and it'll average out the week that we'll have another great week, just like we do every week, because we use a proven and repeatable strategy, right? So if you're not familiar with our channel and you've made it this far, make sure you go check out our other videos showing you how we set up our charts, and make sure you hit the subscribe button, the notification bell. If you have X, follow us on X, and kind of just get if anything, just follow us and get a feel for how we trade. Following us real time can sometimes give you a better idea. If you like the video, make sure you give it a thumbs up, hit the like button. If you didn't like the video, let me know why. If you see something in the charts that I'm not seeing, let me know, because I'm always open to other people's opinions, and I'm always thankful to be made aware of something I should be aware of, if it's going to affect my bottom line. So I'm always open to dialogue within the comments. Keep everything respectful, but let us know what you think. So everybody enjoy the rest of your night. Have some good rest tonight. That way you're refreshed for the trading in the morning, and let's get ready to get at it.